Manulife Global Strategic Balanced Yield Fund has three objectives. We want to generate for people an overall capital return. We want to generate a good income yield, and we want that income yield to grow over time. Now, we do that across two asset classes, equities and fixed income. Within equities, we're looking for companies that generate excess cash. We look across all geographies, across all market caps. We invest in companies for long periods of time, so we trust management to deploy that capital wisely, but we believe it's a good discipline on them to return some cash to us, and clearly advantageous from an investor perspective to earn an ongoing income from their investment while they're waiting for that to mature. From the fixed income side, we invest in both governments and corporate bonds, again with the objective of generating an income for the underlying investor as they wait for capital appreciation from the overall fund. Our investment process starts with idea generation, both formal and informal. Most of our work then is done in fundamental research, meeting with management teams, reading annual reports, building models, and ultimately determining both what a fair value of a company is, as well as the risk associated with it. From that, we then build the portfolio. When we're looking for ideas, we're looking for companies with absolute return potential, where the risk is limited in our opinion. We're looking for decent yields, where it's also that management are growing those dividends for us, and in that way we're achieving the objectives of the underlying fund. Ideas are generated through both informal and formal means. Informal can it can be company presentations, it can be talking to brokers, reading the newspaper, etc. Formal idea generation essentially is driven by screening. We try to take the world down to a manageable subset by identifying companies that have the right characteristics for us. We also are aware of what companies are held by colleagues across Manulife Asset Management, and again use that simply as idea generation and do our own research from that. For every company we invest in, we specifically focus on what the downside risk is. It is not enough, in my opinion, for us to talk about a company in terms of its upside potential if we do not frame the valuation argument in terms of what the risk is. We try to identify, if we're wrong, where are we most likely to be wrong, and what is the implication for value if that occurs. And every stock that we invest in, we know what we believe the downside risk associated with a stock is.